monthly, weekly, so many time frames. But now what you got to realize is that what are the most important time frames, right? What are the most important time frames? The most important time frame would be your 4 hour, your daily, right? 1 hour as well. Before swing traders start to roast me, I'd say weekly as well, right? But the most important one, I'd say, would be the daily time frame. Because when you're looking at, let's say, the New York session, right? You're looking at where the daily candles are moving, right? And based on the daily candle moves, you're taking a trade. I would say that if you're looking at 5 minute or the 1 minute, like I know a lot of people, they look at the 5 minute and the 1 minute because they say, hey man, like I can look at these smaller time frames, and what essentially I can do now is I can take a lot of trades, and then I can win a lot of trades, and then I can win a lot of money. That will happen for the first 2 days, and then you're gonna get nothing. Trust me. Small time frames are your enemies. I say the small time frames are put there on purpose to fuck you up. Because when you're looking at a small time frame, you see all these candles moving, and you're like, oh man, look, 5 minute creating support, 1 minute creating support, buy. Oh no, it goes down. Because in reality, you weren't waiting for the higher time frame to close, right? The 1 hour or the 4 hour. It's very important because sometimes what's going to happen is that the candle is going to be bullish and there's going to be 5 minutes left for the candle to close, the 1 hour candle to close, and people are going to try to take a trade. And what's going to happen is in those 5 minutes, the whole candle can flip. The entire candle can just, it can just close in a way where you're like, oh shit, now what do I do? Right? That's why time frames are very important, that you need to choose specific time frames. I would really advise people to start looking at the 30-minute to 1 hour to 4 hour time frames and start to see that, okay, where can price be going? So we're going to talk about where price goes and how it goes later on in the examples. We're going to clear up a lot of confusion here too. But these are time frames you need to look at. You also need to understand that the smaller time frames build the overall larger time frames. Makes sense? Like the two 15-minute time frames, they build the 30-minute time frame. And then two 30-minute time frames, they build the overall 1 hour time frame. Makes sense? Because let's say you have a daily candle, which is like this, it has a nice wick, and now you're expecting the next daily candle to form something like this, right? Now it looks really easy on the daily time frame because you have a clean candle. But if you're looking on the 1 hour time frame, the candles are probably going to look something like this. Price came down, price went up, and price closed somewhere here, right? So this move down is this daily wick, right? And then what's going to happen is it's going to consolidate, price is going to move up, and then it's going to come move down, fill this wick on the daily, move down to make a wick, and then go up. Makes sense? So now you're looking at the overall 1 hour time frame in the market structure, but the overall daily looks much cleaner, right? So we're going to talk about this later on here in the examples. Okay, time frames are really important. Make sure you know what time frames you're looking at. If you're trying to take 1 or 2 trades a day, I would really encourage you to look at the 1 hour time frames and the 4 hour time frames, because you can get some really good moves on 1 hour and the 4 hour, and that way you can also eliminate a lot of your over trading problems as well. Okay, let's go to now the most important thing is now, what is momentum and what is volatility and volume, right? So volume is caused by sudden changes in the market. Sudden changes in the market means when there's market opens, market closes, there's news, breaking news, speeches, right? Because when there are like extreme changes in the market, that means that, hey, there's a lot of volume in the market, because there's a lot of, I'd say that there's volume and volatility, you can relate that to adrenaline being pumped in the body, right? Which makes the body moves in the same way it makes the market move. Or when you take pre-workout and you go to the gym, now you have a lot of energy. That's what it means to have volume in the market, or volatility. When there's a lot of movement, there's a lot of orders, because that's when you see, let's say you have the London Open. When London opens, there's a lot of orders coming in and out of the market, right? So that's when you realize, okay, like, you know what, London is open, there's a lot of orders, so now there's a lot of volume in the market, right? Also, when there's Asian Open, or when there's New York Open, or when there are news events, those big news events like CPI, NFP, interest rates, you know, like GDP news, PMI news, you know, home sales, like all those things, they cause volume in the market. And that's where the money is made, like when there is volume pumped into the market, right? Now, what is momentum? I always say that momentum is not seen, momentum is felt, right? It's a name given to the movement of the market, right? When there's a lot of volume, when there's a lot of momentum. Let's say guys say that, hey, like, you know what, you need to go to the gym every day, right? With intensity. So you go to the gym every day. Now, when you start to go to the gym for the first week and the second week and the third week, now you have some momentum, right? You have momentum that you're going to the gym every day. Same thing happens in the market. When you see price moving really fast up and down, or let's say you see price that's constantly making higher highs and higher lows, that's when you say, oh, listen, market is in momentum, right? And the momentum is, let's say, bullish. So you say, okay, market is in momentum because there's a lot of volume in the market. There are a lot of orders coming into the market, which is making market move. And then you turn around and say, okay, now the market is in momentum. Makes sense? It's very important because more times you come to the market at the same time, you will realize, okay, maybe this is the time when market is in momentum. Because like if you look on the webinars, or if you come on the Twitch stream, we always come at like 6:30 or like, you know, around 7 a.m. Eastern, 7:30 a.m. Eastern. We're going to say, okay, you know what, this is a time when there's going to be when market is going to be in momentum, because a lot of volume comes into the market in pre-New York, in New York's session, like when it opens. So that's the thing about momentum and volume. Let's see if anyone has any questions in momentum. We're going to talk about momentum later on as well when we do the examples. Okay, no questions? All right. Let's move on to market sessions. This is also very important when you're building a trading plan. Market sessions, okay, and market timing. All right. So market timings are basically the times when there's a lot of volume in the market, right? When there's a lot of volatility in the market. That happens when market opens, that happens when market closes, and that happens on news events. You really have to understand, like, there are a lot of people still who don't really look at, the Forex Factory, or they don't really look at when there's a lot of news and stuff. So this is really important, that you should know what time are news coming in, what time are markets opening, what time are the markets closing. We're going to do a little rundown here. First of all, you have the pre-London session. This is when there's a lot of volume in the market. Pre-London starts after the Asian close, right? This is when the London markets are starting to open up, right? When it's starting to open up, they're processing what orders happened in the Asian session, so they start to process those trades and start to open up. So now then you have London Open. This is when your banks start to open, your institutions start to open. This is when your hedge funds start to open. So that's why you see a lot of, like, you know, wicks, a lot of, like, you know, large candles. You see a lot of volume in the market, and like, you know, this is when they say the market is rocking and rolling. After London Open, this time is pre-New York time. Like it's between 5:30 a.m. till 8 a.m. Eastern. This is pre-New York, right? So now pre-New York and London overlap is the most volatile time of the market, because now you have to realize is that London Open is affecting Euro, it's affecting GBP, it's affecting CHF. I know I'm missing a few more currencies, but these are the main ones. And then when you have when you have US Open or the New York Open, it's affecting US dollar, it's affecting CAD, it's affecting gold, right? So now when all these currencies are open at this time, you understand that, okay, you know what, there's going to be a lot of volume in this session. But if you're only looking at London, right, you can see that London may only affect these three currencies right over here. And then you have the slowest one, which is your pre-Asian, and you have your Asian session, right? So now, the reason I have these times here is so that when you're building a trading plan, you understand that, okay, maybe a certain time suits me best, right? I can look at myself and I can tell you this right now, that when I'm trying to trade, I think this time right over here, it suits me the best, because I can wake up early, and now I know I have 3 to 4 hours to look at the market, right? And when I can look at the market in this time, what's going to happen is that I can probably train my mind to know how market moves at this time. Because trust me, market will not move the same in pre-New York than it does in London, you know, or when it does in Asian. Market does not move the same way, because in Asian, you have a lot of consolidation, because there's less volume in the market, because there's not much happening. Because in Asian, you only have JPY open, and you have AUD and New Zealand open. Sorry about the mess here I'm making, right? So there's less volume, but it does not mean you cannot trade the Asian. There are a lot of people who trade the Asian session, and they do it very successfully, right? So even if you only get this time to trade, I still think this is a very good time to, like, you know, really train your mind to the movement of the market, because you'll get 1 or 2 pushes. You know, same goes for pre-Asian. This time also suits me best because I'm home and, like, you know, I can still trade. But so the rules for setup, support, resistance are the same. Yeah, the rules are the same. We're going to go over all of that later on when we talk about examples. So we're going to go over all of that. So would be best to trade New York, London rather than forcing Asian, because that's like 1 a.m. our side. Yeah, sure. Yeah, that's fine too. If the time works for you, then that's awesome. Because trust me, like a lot of people, they look at the Asians session and they think to themselves, okay, you know what, the Asian is pretty slow, so we're going to probably, like, you know, skip it. But truth be told, I know a couple of guys who are very, very successful. They're making a lot of money, and they only trade the Asian session because they've put in the time to look at the Asian session and they've understood the way it moves. That's the important key, that you understand how a session moves. Because like a lot of people, they know a lot of rules, but they don't know how a session moves. That's very important. Trust me, my most profitable session used to be Asian session, right? Because what would happen is that I would trade, back in the day, I was trading all the sessions. So I would trade the Asian, I would make money, and then I would go trade the London. I would lose money. So this was a no-no because I was waking at midnight, like, you know, in the middle of the night. And then I would trade to New York. And in New York, it used to be 50-50. So what I did, I looked back at my trades and I realized, okay, you know what? I don't need New York and I don't need London if I can only make money in Asian. So I started to do that. And then with that, I started to look at New York session later on. And then it took me a couple of months to actually identify that, okay, maybe in New York during certain times I can catch a move because that makes sense to me. So you have to keep watching it to make sense. Rakil, by the way, New York and UK session, which one do you think will be more volume? New York and London overlap has a lot of volume, but if you're new coming in to market fluidity, I would really advise you to pick a time and only focus on that time. Yeah, we're going to look at the how to make a trading plan too, but the most important thing is that you need to pick a time first, right? Like a lot of people are going to be a lot of a rush to trade. They're going to be in the pressure to take a trade, but trust me, the best thing to do is just to sit back and watch how the session moves, right? This also goes into the fact that, like, like a lot of people, what they do is they say that, hey, like, you know what, I'm only gonna look at London, and after they're done looking at London, they'll still be looking at charts maybe at this time right here. And then they'll turn around and say, oh, I'm just looking at charts for practice. No, that's bad. When you're only trading London, you're only looking at the London charts for practice. You're not looking at Asian, you're not looking at pre-Asian, or you're not looking at New York. No. You're only looking at this time here, the London time. That's the only time you're looking at to practice or to trade. Right? This is very, very important. What would you do if you work in shifts and you can only trade this, and you cannot trade the same session all day? Yeah, we're gonna go over that too. That's more of a private conversation, so we can do that later. Let's move towards some more fun stuff. Next thing we're gonna go over is zones, support resistance, zones ranges, strength of zones. So we're gonna go over that here in a bit. Let's start that with zones. Right? Now, supply zones are basically, you can look at it as like, something where something is supplied from, right? So if someone is supplying you with something, that means they're selling you that stuff, right? So that's a selling zone, or you can also call it as a resistance, right? A demand zone is where something is in high demand. When something is in high demand, that means you're buying into it because it's high demand, everyone loves it, so they want to buy it. So that's what's attractive to buy, and that's called the buying zone, which is also called support. Right? So for simplicity, you can say that support, resistance are basically, supply and demand. They're just different names given to the same concept. Okay, the strength of the zone. The strength of the zone is measured by the amount of candles stuck there. This is very important, okay? I hope people make notes. The strength of the zone is the amount of candles either stuck there or by a force a candle is rejected from it, right? So let me give an example here. Let's say you have a candle like this and you have a big wick at like a zone. Right, it kind of can be like this too, and you have a big wick there, right? And this could be your entire zone, right? So when this happens, sometimes this means that this is a strong ass zone, right? Especially if this is a 1 hour or a 4 hour candle, and the candle does this in a price level, you're looking left at the price, right at the price, and you're like, okay, maybe this is a strong ass zone. Right, so this means that, okay, pricing can continue to move up because it got rejected really heavy. Or when you have price that comes down and it starts to consolidate, then you know that, okay, price tried so many times to break, right? It tried 1, 2, 3, 4, 5 times to break. It could not break. Yeah, it could not break. So what happens? It starts to go up, right? Because you had a lot of candles consolidating. This means that this was a strong zone. It could not break, right? So that's how the strength of zone is measured. So now if you have the 1 hour and 30-minute candles that's been stuck, so that's going to be a very, very strong zone, right? If you have, let's say, the 4 hour or the daily candles rejecting a zone, that means it's an extremely strong zone and it's most likely to continue the opposite way. right? Now, when you're looking at the weekly and monthly, like I know some people here, they trade on the weekly and monthly. Not a lot of people, but some do. That requires a lot of discipline. That's a lot of willpower. I think I have a lag with the speech and what's appearing on my screen. Oh, maybe it could be your internet. All right, so that's how you measure strength of zones. Strength of zones, you basically measure off your 1 hour and 30-minute time frame. We're going to have a lot of examples based on that too later on, so we're going to go over it. All right. Now what we're going to do is we're going to talk about zones and ranges, right? Some people don't know the difference. Some people do know the difference, but it's always good to have a little recap, right? So now let's say you have resistance, okay? And then you have support right over here. Now, in this support and resistance, you have, candles. These candles are going up. Candles go up and candles come down. They're going down and whatever, these candles are doing these things here. And then you have candles going down, and then candle goes down more, and then candles go up like this, right? And then candles just start to go up. So now you have this zone here. The zone is basically a collection of prices, right? So when you look right, you see prices here to the right. Let's say the prices would be 111 and then 121 for simplicity's sake, and 131 and whatnot. In other news right now, PMA holding a meeting, thinks she's resigning. Oh, perfect. Okay, so you have a range of prices. Now, a lot of people, what they do is that they will draw their resistance, and what they're going to say is, oh, hey, look, my resistance is at 121. Why is your resistance at 111? It doesn't matter because it's a zone, right? All these prices are in this zone. That's why sometimes, I draw zones that, okay, this is the zone where candle can possibly come into and reject and continue to go up or down based on the fact if it closes above or it closes below, right? So those are zones. Same thing here, right? The zones is a collection of prices. So don't get caught up on the fact that, hey, my support is at 90. Why is yours at 90.5? It's all the same thing, right? And then you have the distance between the zone. It's called the range. This is where you take your trades between ranges. Okay, so what's this question? When the zone is broken, do you wait for the candle to close above the wick or just above the previous body? You wait for the candle to close considerably above than the previous candles, like the bodies, right? If it's above the wicks, that's perfect. But sometimes, the wicks get in the way too. So then you got to judge it based on what's happening, right? Because every situation is very, very different. It's very, very subjective. But most times they're all the same, right? So now let's say you have this range. So now let's take an example that you're trying to sell from resistance, right? You're trying to sell from resistance. So now you have this big range. And let's say that this range is, let me just get a pen. Let's say this range is 20 pips, 20 pip range. So now your chance of getting 20 pips from resistance are way higher than your chance of getting pips when you try to take a trade between the range. Now we're going to talk about this ranges more in our examples too, but what I want everyone to understand is what a range is and what zones are, right? Ranges are the distance between two zones, or the ranges are the distance between support and resistance, right? And the zones are the collection of prices in a support or resistance area or in a supply or demand area. That's what your zone is, right? So a zone can be 5 pips, zone can be 10 pips, right? Because you're measuring the zones. If you go to the higher time frames, let's say you look on the weekly and the daily, you have larger zones, right? Because the zones are bigger. But if you look on the 1 hour or 30-minute zones, those zones are going to be much smaller than the higher time frames. Make sense? So the important thing is ranges. That you need to identify you have a big enough range to catch a trade. So if those 30 and 15-minute candles in this picture, you are waiting for a bearish close at resistance and you take the trade, yes, exactly. And we're going to go over all those examples too here later on. All right, so let's go towards support and resistance, right? So a support is a level on a chart that acts as support in a way that it's supporting the price from not dropping. Makes sense? Now you need to understand that, let's say a support is like a floor, right? A support is like a floor and price is like a bouncing ball. You know, so ball comes down, it sees support. Let's say this is a 1 hour or the 4 hour support. It sees support and it bounces. That's what support is, because that support is supporting the balls or the price's downward movement. Now, when this support gets broken, it's going to move to the next support, right? You look left and you'll see the next support. And this support is going to be stronger than the support it broke. So then it's going to bounce off the support. It's going to move up. And then this support becomes resistance. Make sense? So then it's going to bounce from this resistance and it's going to come back down to support because it's a bouncing ball like price, and that's what it does, right? So now resistance is also an area on the chart that resists the price from going further bullish. Makes sense? Like it's resisting price to going through it. That's what resistance is. Entry, every next level of resistance reached, it gets stronger and stronger. Why it gets stronger and stronger? Let's take a look at that. Let's take a look at that, because when prices, let's say you had, actually let's go to the chart. Let's go to the chart. Okay, let's say we have this chart, right? But before we look at this chart, let's take a look at an example, right? Let's say you have a box here, right? And let's say this is your weekly support. Let's say this is your weekly resistance, right? And then right over here, you have daily resistance, and right over here, you have daily support. Then you have 4 hour support, and then you have 4 hour resistance here, and then you have 1 hour. We only go towards 1 hour, and then you have 1 hour over here, right? So as price breaks this resistance on the 1 hour, it's going to go to the next resistance, right? So what time frame is that going to be? The 4 hour, right? And that's going to be stronger than the 1 hour. And then once price breaks this, it's going to go towards the daily, right? And then the daily is going to be stronger than the 4 hour. Makes sense? And then after it breaks the daily, it's going to go higher towards the weekly. And that's going to be stronger than the daily. That's why they say when price breaks the support, it's going to go towards the next support. And that support is going to be stronger than the previous one. Same thing works for resistance. Okay, remember this. When price breaks resistance, it's going to go to the next resistance. It does not mean it's going to break it, because that's stronger than the one it already broke. Sometimes, you know, price just starts smashing the fuck through supports and resistances. That's just a lot of volume in the market. And because the price is moving in heavy momentum, right? So let's take a look at this chart. Let's try to look at the candles and the stories candles we're trying to make, because we're going to talk a lot about the stories candles are trying to tell us, and that's how we're going to, like, you know, start to look at the charts. Okay, so same thing here. Like, you know, let's start from this move right over here, you can see the time. This time is 3 a.m. Eastern, right? 3 a.m. Eastern is your London session, right? So price moved up. London, like, there's a lot of volume, there's a lot of momentum, starts to move up, but you're constantly looking left, right? It starts to move up. It comes back in this area right over here, right? So now when you're looking here, you understand that, okay, we had support at this point, but the 15-minute candle, so since we're good traders, we're waiting for candles to close, it closed back in the range. So when it closed back in the range, you understand that, okay, now it's back in this range, this was support, so it's going to stay in this range. But there's a lot of volume in the market. There's a lot of momentum in the London session, right? So what did it do? It pushed it through this resistance you had at 147,600. If you look at the price, it pushed it through. And when you're looking left, you're seeing how far can it be pushed to, and you see this resistance area. And then look what the price does. The price falls back down, and then this next candle goes back in this range down here, which was support previously. And when you look at the price, it is at 147,500. So now you have a support formed, and then you have a resistance formed, right? This is a very good market structure. This is the way you should be studying market, because once you have this support form at 147,500, in your mind, okay, this is a strong support, because when New York session comes around, look right here, 9 a.m., 9 a.m., right? Now, let's take an example that, let's say people trade in New York. And when they come into New York, and when they look at this chart over here, and they look left, they see that 147,500 was respected during London. So when price comes back to this level, they can know that, okay, this was respected as support. It broke down, and it came up for a retest. So now there's a high possibility it's going to continue to move down. Where it's going to move down, it's going to move down to the next support it has. But since there's a lot of momentum,